It's 3 a.m. on November 5th, 2024. Donald Trump declares victory as the 47th President of the United States. Within moments, gold and silver begin to sell off, while Bitcoin and stocks surge. Just as the country is catching its breath, the Federal Reserve announces another rate cut, sparking further shifts in the market. We're here to cut through the noise, breaking down the policy shifts and fundamentals behind these moves in gold and silver, and what they could mean heading into 2025. If you're looking for the insights, stories, and developing news in the world of precious metals that no one else is covering, hit that subscribe button to stay tuned and support the channel. Leading up to election night, media predictions of a prolonged, messy result had markets bracing for turmoil. Investors flocked to gold, hedging against anticipated uncertainty and political drama. But by early morning, the outcome was clear. Trump had decisively won, and the markets responded accordingly. For precious metals, that meant an immediate sell-off, a reaction to the now fading uncertainty. Had there been more drama or delay, gold might have stayed high, but now that we have a decisive outcome, it's not as bullish for gold in the immediate term. The sell-off was seen as an unwinding of the investments in protective assets, and gold found support at $26.50 per ounce, down almost $100 per ounce. Does this mean a Harris victory would have resulted in a rally in precious metals? It's possible, with an expectation of political uncertainty and progressive policies centered on social spending, climate change, and increased taxes, that gold markets would have renewed vigor. This does not mean that a Trump presidency has ended the gold bull market, however. Trump's policies offer a mixed bag for gold. Some of his policies, such as universal tariffs, will increase the cost of goods broadly if enacted, which is inflationary, and that tends to be good for gold. He also has a history of pressuring the Federal Reserve for lower rates, another positive for gold, and his fiscal policies tend towards a weaker dollar and substantial government spending. But some of his policies could be characterized as anti-gold. With his pro-business mindset and policies favoring economic growth, investors are attracted to equities rather than protection assets like precious metals. Lower corporate taxes and energy independence also tend to drive demand for other investments like equities. In short, Trump's victory has charted a path for policies that are somewhat mixed for gold, but the fundamentals of the gold bull market are still strong. It's been some time since the Federal Reserve last met, and this is by design. The Fed does not want to appear to influence the political landscape, especially during an election period, when any policy shifts or rate changes could be interpreted as supporting or undermining a particular candidate. By maintaining a low profile, the Fed aims to keep its decisions separate from election cycles. However, with the election over, the Federal Reserve was free to meet again. The market expected another quarter basis point cut, and that is exactly what happened 2 days after the election on November 7th. Gold and silver rose slightly on the news. Rate cuts are expected to continue well into 2025. In addition to rate cuts, several other structural elements exist that will continue to push gold higher, independent of any policies from the new administration. Global central bank demand is projected to remain elevated, especially from countries planning to move away from the dollar. In the latest survey of central banks conducted by the World Gold Council, 29% of central banks expect to increase their gold reserves, the highest rate since 2018. Long-term inflationary pressures remain intact. While inflation rates vary, it is expected that global debt levels will remain elevated, expansive monetary policies will continue, and ongoing supply chain challenges will persist. As inflation erodes purchasing power, it's predicted that gold will continue to perform. When considering all factors, it appears the bull market will go on, though it would be unsurprising to see gold rewind to a less bullish trajectory. Still onward and upward, but more sedately. Silver, not to be forgotten, may outperform against its counterpart. Silver is the industrial precious metal, and it historically thrives in a growth-driven environment. It is very typical to see silver perform well during periods of economic expansion, and has a poorer track record in times of recession than gold. The gold and silver markets will likely react in nuanced ways as policies mature, are communicated broadly, and then put into action. While elections bring high emotions, staying focused on meaningful policy shifts and economic fundamentals is what matters most. That's all we have for you today. Please remember to like, subscribe, and share with a friend. Thanks for watching, and we'll see you next time.